but that's why we're doing it on Wednesday. How did the world's richest people make their money, Warren Ingram?
So I must say I was scavenging this off Forbes because they do good work on this, to actually understand that, and they survey the world's billionaires. So we are only talking about dollar billionaires, and this is US dollar, not some other countries' dollars, and interestingly, it's not out of the tech. So my thought process, if I had to do this, I would think most of us would say comes from the tech industry, the Facebooks and the like. And interestingly, no. In fact, the tech sector only gets you fifth. The fifth most billionaires in the world are the ones that have built all these newfangled things. And it comes from the world of finance, to answer your question. Finance and investments.
Which doesn't surprise me. I mean, who was it? And you will know this better than I. It's a book that goes back to the 1920s, I think. Where Are the Customers' Yachts? Was the title of the book. Have you ever come across that book?
I haven't read it, but I know the title.
Let me ask my good friend Google, from the guys who make no money at all. Where are the customers' yachts? Because this concept of financial services and financial advice, making lots of money for their, originally published in 1940 by a guy called Fred Schwed. Promise. Where Are the Customers' Yachts? A good hard look at Wall Street. Wall Street is the place where money has been made, where investment bankers have gone and where traders have gone and made killings or killed themselves by the time they were 30. It was the place to go and make the big bucks really fast. It remains true to this day, because you would think with the Googles and the Facebooks of the world and the Microsofts of the world that tech has been a great wealth generator for more people than it actually has been.
Well, I think I think the fabulously wealthy that have achieved really significant money in a very short space of time, the tech industry certainly leads that. So if you look at the top 20 billionaires, then tech dominates. They're in I think it's the 8 out of the top 20. But for the rest, I think Warren Buffett also said that financial services or Wall Street is the only place where the clients arrive in the limos and the advisors arrive in the tube on the underground.
No. The advisors, the clients arrive on the underground and the advisors arrive in the limos. I think it's the other way around. It's the other way around.
Who can afford it? Yeah. And I think the misleading thing about the finance one is that it's a lot of big fund managers and hedge fund managers in particular, and then the advisory businesses around that specifically, and so they take major leveraged views on the world and do generate that. But I think for me what is interesting, looking around this is, surely you can attribute some of this to luck. People that have developed the kind of competitor to Facebook or the competitor to Google are nowhere. And so there is only one of those, and they worked incredibly hard. They were very bright, but there were plenty of other people around.
Colin Cullis's point in Business Unusual last night was that we've actually created these giants with very little competition and very high barriers to entry, because to compete against Google, you're going to have to do something quite miraculous. Or to compete against Facebook, you're going to have to do something remarkably special in order to be able to break the monopolies that they've created. And that's why there are actually very few of these dominant players who've got virtual monopolies in the Western world. Certainly.
Yeah, and I think the issue in the beginning was there were lots and lots of them, and then suddenly that one got ahead, and now they have got this major moat around their business, where they generate enormous amounts of cash, and their shares are so incredibly valuable that any kind of potential competitor that they see on the horizon, they'll simply buy them, and they'll buy them for quite a large amount and build out, and so that is the case. But what gives me a bit of hope is that you look at the rest of the sectors, and they're not these are not places where instant wealth is generated. These are sectors where people have to build sustainable, good businesses, develop good business practices, and take a multi-decade view to building their wealth.
We're talking about the industries that have created most of the world's billionaires, and the irony here is, while the technology industries of the 21st century have created some very high profile, very successful tech millionaires, the vast majority of of billionaires in the world have actually been created in other industries, predominantly the banking sector. But what's so interesting here is fashion and retail. And suddenly you go, but that does make sense, because if you are a great designer and you have a global presence and a global brand, if you're an Armani or you're a Ralph Lauren or
Zara,
one of those people, you actually then again become a very dominant force in global fashion. And the global fashion industry is supported through media, it's supported through hype and big profit margins.
And we talk about fashion and retail, you immediately think, especially in the States, how the shopping centers have been decimated by places like Amazon or businesses like Amazon. But what's interesting is look at the power of something like Walmart, and suddenly you realize that retail, one of the people in that fashion and retail segment is a woman who runs a business that sells mattresses in India. The most basic thing, mattresses in India. That's not, high tech at all. And so, retail features very strongly. The founder, and I can never remember his name, of the business that owns Zara. That's a long standing, well built business, built over a long period of time in many different countries. And the trick there is about logistics. Yes, understanding your client, et cetera, but still, good old fashioned business, selling people things that they need at the time that they need it.
And the real estate industry has created more than its fair share of billionaires as well. I mean, it's a very significant one. And when one looks at the value of real estate markets, in particularly places like Manhattan, for example, if you've cornered a part of that market, you're super rich, super quick, over a period of time.
Yeah. And what's interesting is just looking at the newcomers to the list and where they're coming from. And it's probably not a surprise, but in the real estate section, definitely, we're seeing a lot of, dollar billionaires coming in from China. And that makes sense. Where they've looked at where the country's expanding, where the new cities are going to be built. They've taken very big views on the world and said to themselves, okay, we'll take a view and taken huge positions, in a very fast growing, economy.
It's very nice to sit here and talk about this, but your point being is that you're not if you're going into business for yourself, there are plenty of ways to make money. You don't need to try and create the next Facebook or the next .com whiz bang pop, which is what so many people starting out in their own businesses are doing. There's some pretty old school industries, really, that are perhaps slower, perhaps a little less exciting and get you a little less hype, but will possibly generate you better returns over long periods of time.
Yeah, and I think that to me, the absolute key to successful investment, whether it's starting out on your own or trying to find these businesses to invest alongside them, is you have to take a multi-year, and I almost think a multi-decade view when you make those decisions. So if you say to yourself, I'm going to go out and start a business like this on my own, or I'm going to invest in a business like this, then trying to understand, why is that business going to be around in 20 years? Firstly, forget about whether it's the best or whatever. Just start there, because I think when I talk to young entrepreneurs now, that they're always about this thing of I'm going to build the next thing, the next platform, the next whatever, the next crypto trading platform, etc., etc. It's all about let's get rich next week and we'll be done. And obviously those things are going to fail. That's the point, is that, if you're so short-termist in your view, that's not built for long-term success.
All right, here comes the fight. I warned you I'd fight with you. If I'd taken 20 years ago 1,000 rand, okay, or 10,000 rand, let's put proper money into this thing, 10,000 rand, and I'd invested it in the surest thing on the US stock market at the time, General Electric. And I had taken another 10,000 rand and I invested it in some crackpot scheme, some fool who was selling books via this thing called the internet. And he was losing money year after year after year. Guy called Jeff Bezos, Amazon, it's never going to work. Amazon has outperformed General Electric, which has gone into free fall, hundreds of times over. We've got to be very careful about simply categorizing the history and say, look at historically what people have done versus what the future may look like.
Okay, so I see your point, but I'll raise you.
Oh dear.
Interesting thing about Bezos is he doesn't have a short-term view. He's looking at this as a very long-term investment strategy, and I wonder how long ago he was already planning to buy bricks and mortar stores. So you've got this guy that, yes, he was selling.
I wonder if he ever intended to, or suddenly he realized that it was quite a grown-up thing to do. Maybe the internet wasn't going to be the be-all and end-all. Certainly it would disrupt and change the world, but it wasn't going to be the only, multi-channel retail seems to be the new thing.
Yeah, exactly. And what's so interesting about that is, he's as he spread and diversified his business model, you can't just say he's a retailer, and I think he is a heck of a retailer. He's also got an incredible, proper tech business selling the back end of a lot of this online commerce to other businesses. I mean, Amazon Web Services is an enormous business. But the interesting one for me to see your old world example would now be Walmart, and looking at how they are an incredible logistics and tech business themselves, and actually really capitalizing on their online sales, running it through their stores as well.
Let's take an investor's eye to this thing then and say, right, we're starting from scratch today, and sure, you want to diversify, you want to create businesses, but you are taking a huge amount of risk if you're investing in your cousin Johnny's IT startup. However, if you're going to be serious about investing, yes, you need diversity and diversification. But don't be throwing all your eggs into one particular segment.
Exactly.
High tech is high risk, just based on simple valuations. If markets do overcorrect, as they are prone to do from time to time, you could get burned even in the mighty Apple and Amazon and the other fangs. So diversify.
And don't just disregard the old world, because some of the amazing businesses that have specialized in great culture and being very adaptable to the world and the way that the world changes. And I'm using Walmart as a real example here. You look at how they're expanding internationally, how they're growing their online business. And, I think people will disregard them as an old world fuddy-duddy company. And I think that's really silly. And then I look at their valuations relative to Amazon, and I'd say to myself, if I've got $10,000 lying around and I'm not going to buy whiskey with it, then maybe I'm going to go into an a Walmart rather than an Amazon.
Interesting view. I prefer the other method of making money as a billionaire. I like what the 33% did who inherited it.
They were just born into it, just sheer dumb luck.
The genetic lottery. I hate 33% of billionaires. Maybe more. Warren Ingram, thank you very much, Warren Ingram, with Personal Finance this evening, giving us a very nice perspective tonight on the industries that have created most of the world's billionaires. Don't